warm welcome to my class in Accounts and Finance. I will devote the next few sessions to Goods and Services Tax, popularly known by its acronym GST. As you know, indirect taxes are the major revenue for any government. In the case of India, it constitutes 28% of the country's revenue. I will give you an introduction about the implementation of GST. GST is based on a report submitted by the Kelkar Task Force in 2004. Successive governments could not implement it for one reason or the other. Finally, the Lok Sabha on 29/3/2017 passed the GST bills. It became law when it got the assent of the President on 12/4/2017. We will now examine some of the salient features of the GST. 1. It is an indirect tax. What is the distinction between a direct and indirect tax? The major distinction is that in the case of direct tax, the person who bears the burden of the tax pays the tax. Whereas in the case of an indirect tax, the person who bears the burden does not pay the tax. Somebody else, e.g., a retailer, pays the tax for him. 2. It is charged on goods and services. There is no separate tax for service. Another feature of GST is that it replaces a number of other indirect taxes. Before the introduction of the GST, there were a number of taxes in existence, like Central Excise Duty, VAT, octroi. Octroi is an entrance tax. The other feature is that GST avoids the cascading or snowballing effect of taxation. Now, what is cascading or snowballing effect? I will just give you an example. Manufacturer, wholesaler, retailer. The manufacturer will charge central excise to the wholesaler. The wholesaler, in addition to central excise, will charge VAT to the retailer. The retailer will charge VAT to the ultimate consumer. So it is amounting to double taxation. Then GST is a consumption tax. The state where the goods are consumed or services used will be eligible for 50% of the tax. Suppose an item is bought from Tamil Nadu by a dealer in Kerala. The 50% of the tax will be given to the government of Kerala. It is shared by the central government and the state governments concerned equally. 50% of the tax collected will be retained by central government and 50% of the tax will go to the state government concerned. Seamless credits are available to taxpayers across the supply chain until the final consumer pays the tax. Then It imposes higher tax on harmful products like tobacco. It meets the demands of a section of the people who were making a hue and cry for a uniform tax system in India. However, there are adverse effects for the GST. Prominent among them are: 1. It leads to price rise and therefore creates inflationary pressure on the economy. Then there is no distinction between the rich and poor. A person who buys the same product pays the same tax. With this, I will end the current session. We will meet in the next session. Thank you.